Welcome to Turning Hard Times into Good Times. I'm your host, Jay Taylor, and I'm speaking to you from New York City on the 6th day of September 2016. As I like to remind you each and every week, I'm also the author of a newsletter, Jay Taylor's Gold, Energy, and Tech Stocks, and I must say that we are having one of the best years we've had in a number of years since 2010, 2011. This is really a wonderful year for those of us on the long side of the gold markets and the gold share markets for sure. My company, Taylor Hard Money Advisors, is also in partnership with Chen Lin, who publishes What is Chen Buying, What is Chen Selling. And you can subscribe to both my letter as well as Chen's letter at miningstocks.com, or you can call our office here in New York during normal work hours at 718-457-1426, 718-457-1426. I want to thank each of you for listening, making this one of the more popular shows on the Voice America Business Channel. Also, send your questions and comments along to questionsfortaylor@gmail.com, questions4taylor@gmail.com. I want to also thank our sponsors for today's show for making this show economically viable. They are Coral Gold, New Legacy Gold Corp, Brazil Resources, Novo Resources, Columbus Gold, and Aran Resources. Well, today there is some very positive news for Novo Resources that has driven the stock up by over 10%, at least earlier in the day that was the case. You can review that news by going to miningstocks.com. Simply click on the link on the homepage under the heading Gold Stocks Are Soaring, but which ones will rise the most? That's a major heading, but there you'll see at the very top, Novo Gold had an announcement today that has really caused the stock to come alive. I do expect to have Quentin Henning, Dr. Henning of Novo, with me sometime in the near future to talk about his search for the next Witwatersrand-like deposit. Certainly a lot of very exciting news coming out of northwestern Australia at Dr. Henning's project there, Novo Gold's project. And again, read about it at go to miningstocks.com, click on the link, and it will take you right to the press release of today. I've titled today's show The Trump Revolution, The Donald's Creative Destruction Deconstructed. Alana Mercer, Ralph Fitch, and Michael Oliver is with me. He'll be speaking to us in just a few seconds here. The title of today's show is taken directly from Alana's book, The Trump Revolution, The Donald's Creative Destruction Deconstructed. Well, last week we had Lou Rockwell on with us, and he noted that he's not a big fan of Donald Trump, but one of the things he does like about Trump is that he has all the right enemies. And Alana states in her book that Donald Trump is smashing an enmeshed political spoils system to bits. We know now that Hillary Clinton used her office as Secretary of State to enrich the Clinton Foundation to the tune of hundreds of millions of dollars by presumably granting favors to corrupt foreign dictators. And her warmongering neocon status and close association with George Soros means that our endless wars will continue forever if she is elected president. In short, Hillary is about serving Hillary. It certainly seems that way to me anyway, and that is at the expense of the American people. It's the tragedy of it all. Though, of course, she maintains the exact opposite, and there are enough people around, a lot of people around, who are willing to believe and take her at face value. On the other hand, we should ask if Trump were to follow up on his campaign rhetoric, is it possible that the evils of our very corrupt military-industrial complex that Eisenhower warned us against could be smashed to bits, as Alana suggests? And what might a Trump presidency mean for the cause of liberty? All those and more questions will be asked of Alana Mercer. Well, gold shares have been on a tear recently, since about mid-February. And the shares of the exploration companies especially have outperformed the blue chips. So I'm really pleased to tell you that after our first commercial break, Ralph Fitch, the president and CEO of Tri-Metals Mining, will be with us to talk about his company's exploration success with its open pit heap leach project that straddles Nevada and the Utah borders. So Tri-Metals has recently reported some very high grade, or certainly some higher grade assays, and we'll ask Ralph to what extent that may be favorably impact the company's economics on this project that they're moving forward. Fundamental analysts like to look at causes for stock prices to rise. Of course, with gold now in a new bull market, the shares of mining stocks have risen dramatically given the leveraged nature of gold mining economics with the rising price of gold. Regarding fundamentals in terms of the demand for mining shares, I just have to recall a remark that Bill Gross recently made in which he said he was bearish on both stocks and bonds, but he suggested that people should start to buy those assets that the central banks have not yet purchased. Well, lo and behold, we now know that given negative interest rates in countries like Switzerland and Norway, the central banks of both of those countries are buying gold mining stocks. Wow. I mean, that's just amazing. The idea that central banks would be buying gold mining stocks. No wonder gold shares are on a tear. You can see which mining companies both the Swiss and Norwegian central banks are buying. If you go to miningstocks.com, scroll down to the page to a section titled Why the Gold Price is Headed to the Moon, and click on the link in an article titled Central Banks Now Buying Gold and Silver Mining Stocks. In that article, you can see which gold and silver mining stocks both the Swiss and Norwegian central banks are buying. Of course, this is absolute insanity and evil policies carried out by central banks, in my view, certainly. Keep in mind that these criminals are doing what every mafia don dreams of doing, that they are printing money out of thin air and using that to buy real assets. And you have to think that if things keep going like they are, the central banks with their shareholders that own them will basically be owning the whole world, leaving the rest of us in poverty. Well, that is certainly my view, that this is just sheer Keynesian insanity. I'm really glad to have Michael Oliver with us. Michael always sort of calms me down and makes me feel a little better. So thanks for joining me again, Michael.
Hi, Jay. Unfortunately, my phone is beeping, and we'll have to that. Somebody's calling me, and they weren't aware that I was on with you.
Okay.
Apologize for that. As far as the gold and silver situation, a lot of traders were rattled again, as they were in May during August, because there was a sharp sell-off, particularly in the gold miners. And I'm not always calm, but our methodology is different, and we don't run screaming from a room because the price is dropping, unless the price action is doing some damage to a momentum situation. Mm-hmm. And what I think a lot of investors need to really get into their heads is this upturn in gold and silver is not a trading upturn. These markets broke out of a momentum base, if you could see a momentum oscillator instead of a price chart, that was like 3 years wide. And they did it in February. Silver did it when it came up through 15. Gold did it when it came up through the mid-1100s. And, of course, we're sharply above those levels now. And in the process of this initial massive first wave of a new, likely multi-year bull market, you're going to get jiggles, and some of them are going to be sharp. After all, the gold mining sector as such is a fairly illiquid sector, so it can move like a wild child.
Sure.
And I think that the people in that sector need to decide, are you a trader? Are you looking for 2 and 3 week swings? Or are you in there for something potentially much bigger? And there's good, solid fundamental reasons that you've made the case for, and many have, for a big move up. We know that. Mm-hmm. Mm-hmm. I'm arguing from a massive long-term technical perspective, annual momentum, that this is big. It's the start of something big. It is not a trading move. Quit interpreting. I suggest that people quit worrying about little short-term things like where their money growth is down this month or the past 3 months, or whether the Fed is going to do something, or whether they believe in some cycle theory and we're going down in silver for the rest of the year. And I hear all this constantly in emails from prospective subscribers and so forth. So I sort of collect this sense of fear, and I think come that people in this market need to realize the monster that they're in is a monster, and it's going up for a long time. So hang in there is the message.
Yeah, well, Michael, you certainly were very, very calm and very, very collected and very certain about this, threat to a decline. Lots of technical analysts, not momentum guys, but people that just look at price charts, were suggesting that we were in for something quite severe on the downside, and you saw just as a congestion. You were apparently right. Today we're seeing gold up $26.70 a little while ago, $13.53, and now those same analysts are backing away from what they were fearful of. What was it that you saw then? It was basically your momentum work, I guess, that told you, and well above that structure, the structure hadn't broken down, and so you were quite convinced that there may be some gyrations here and there, but basically from an investor's point of view, don't panic, just stay long.
Stay long. Now, unfortunately, some people get long high and are what you call trend followers or trend chasers. And we try to encourage people to get in early in a move before it becomes publicly obvious to every upright human being. But it's still not too late. This break we just had was a buying opportunity. The one in May was a buying opportunity. This is an annual momentum uptrend. It's not something that's going to be measured in hindsight in months. It's going to be measured in quarters and years.
Okay.
You need to approach it that way. Don't get too levered up at the wrong spot. View it as a big move.
Well, Michael, you've held pretty steadfast to this range where you thought we would see the first significant resistance, and it's 1470 to 1540. And as you say, gold is at 1350 today, so that leaves quite a move yet. I mean, that's another $120.
Silver is likely to find resistance around 27. I think a recent high is like 21. The GDX, the gold mining, unlevered gold mining ETF, which is under 30 right now, I still think it's going to 39. And at those levels, at that point, MSA will get more cautious, not about a major top, but of something more protracted in terms of a correction. But right now, no.
Yeah. Is it too early? Is it too early for you, Michael, to have a sense of what the downside might be once we get into that range? It's just too early, probably.
Yeah, I don't have a good handle. I'm not sure the downside is going to be serious. It may be one of these situations where when you hit those resistance zones, you spend time.
Yeah.
6 months or so, not a month or two, but 6 months or so laboring, building a range. It's not necessarily an issue that it's going to drop back sharply so much as that's a barrier. Those levels are barriers in terms of momentum, not in terms of price. And that those barrier levels look like it's going to take a fight to get through them.
Sure.
But getting there could be fairly quick. I mean, we broke out in February in gold and silver, and we're already substantially higher, especially the GDX. And the rest of the move I'm talking about is actually less than what we've already done.
Michael, you mentioned your own words. You're suggesting that that's quite a spread between 1470 and 1540 before we meet resistance. Do you think when we get a little closer, you'll be able to narrow that down a bit?
I may be able to. Yes, I might. Yeah. It's various indicators that give me zones of resistance. It might be a 3-year average oscillator or a quarterly momentum chart or whatever. And I look at the longer-term momentum studies, and I look at where the resistance is. Much like a price technician would look at a price chart looking for resistance. An old floor above you that if you bump it, you're going to stall. I look at the same thing, but I look at it in momentum, and it's usually more accurate that way.
Yeah.
And that's what I come up with. I come up with when I convert it back to a price level, those are the levels I'm looking for, and that's still substantially higher. And that's not the end of the bull market. That's just a big first resting place.
All right. Well, let me ask you one quick question then before we let you go for today. With regard to silver, you still see silver outperforming gold in this bull market? And secondly, do you still see the gold shares continuing to outperform the bullion?
In my weekend report, I adjusted that somewhat. I still see them outperforming gold, but not at the pace they have. The GDX is up 100% on the year. Gold's up 25 or so.
Yeah.
So it's been massive in a matter of 6-7 months.
Leverage. Yeah.
The movement of the gold miners versus gold. I don't think that pace will continue. I think they'll probably outperform gold, but I wouldn't be hesitant now for a newcomer in the market to say, it's a coin toss whether you buy bullion equivalent, or you buy gold miners.
All right, we're gonna.
Yeah.
We're going to have to leave it go at that, Michael. We're out of time, but always a pleasure talking to you. Always eagerly await your discussion on the markets because you have been so consistently spot on. So thank you very much for taking the time to share with our listeners. Greatly appreciated. You're doing a great service. Thank you very much.
Thank you.